Look at this chart. See this brutal squeeze in the indicator? This was your signal, firing off right before this monster breakout to the upside. This one setup gives you a high probability entry point, letting you jump in before the explosive move happens. And this isn't some lucky fluke. Look here at this downtrend. The bands crush together, the trend is screaming downwards, and then boom, the price smashes through the floor, giving you a crystal clear short opportunity. These are the explosive high probability setups we're going to build, step by step right now. By the end of this video, you will have the exact settings, simple two-line filter that forces you to spot these high-energy consolidations moments. You'll know how to trade the powerful breakouts that follow the dominant trend. Alright, let's build this beast from scratch. First, we need to identify moment when the market is quiet and building up energy. For this job, our primary tool is the Bollinger Bands indicator. Add it to your chart for free on TradingView. Think of the Bollinger Bands as your volatility detector. Their whole purpose is to show you when the market is calm versus when it's chaotic. When you add them, you'll see three lines. The two outer bands expand when the market is wild, contract when it's calm. It's these moments of calm we're hunting for, when the bands squeeze together tightly. This squeeze tells you the energy is being stored, often right before a big price move. To make this tool even better, we'll make a few tweaks to the settings. First, change the length from 20 to 55. The why here is simple. We want to filter out the meaningless short-term market noise. A longer setting forces the indicator to focus only on more significant periods of consolidation, giving you cleaner signals. Next, I adjust the standard deviation to my preferred settings for this specific strategy. And finally, I change the background color so the squeeze is impossible to miss. That's it for our first indicator. Its job is done. The Bollinger Bands have found us a potential opportunity, a market coiling up like a spring. Now that our volatility detector has spotted a potential trade, we need to know which direction to trade in. We never want to trade against the market's main current. For this, we bring in our second tool, two classic moving averages. So I'm gonna use the 10 and 1 different moving averages indicator. Think of these as your trend sniper. Their only job is to tell you if the market is a powerful uptrend or a clear downtrend. I use the 10 and 1 different moving averages indicator to keep the chart clean, but you can add two separate simple moving averages. Set the first one to a 200 period SMA. This is our long-term trend line, the big picture. Set the second one to a 100 period SMA. This shows us the medium-term momentum. Here's how they give you an instant read on the trend. If the faster 100 SMA, the yellow line, is above the slower 200 SMA, the white line, and the price is above both, the trend is up. You should only be looking to buy. If the 100 SMA is below the 200 SMA and the price is below both, the trend is down. You should only be looking to sell. So to make it super simple, the Bollinger Bands are your scout, finding moments where the market is storing energy. The moving averages are your general, giving you the green light and telling you which direction to attack. Now we combine these two forces. When our scout, the Bollinger Bands, signals a tight squeeze, we look at our general, the moving averages, for our direction. If the trend is up, we wait for that squeeze. And then buy the breakout to the upside. If the trend is down, we wait for that squeeze and then sell the breakout to the downside. This two-step process ensures you're not just trading a random breakout, but a high-probability setup that is aligned with the market's dominant power. But how do you protect your capital? For a buy trade, you anchor your stop loss decisively below a recent swing low or the lower Bollinger Band. For a sell trade, you lock it in above a recent swing high or the upper band. This strategy forces you to have a bulletproof plan before you ever risk $1.